What's up, y'all? Thanks for tuning in one more time to Wicks and Candlesticks. Today I'm going to go over from start to finish on how I caught this really big move. Today I want to start off with a blank canvas so that you guys can see exactly what I look for when I'm taking the trades. Today I also want to introduce something that's new. Well, not new, but something that I have been using to get into some of my trades and how I've really been doing, relatively very good. So I have been using the the delta, and I want to talk about the using the delta in a cumulative delta. So, um, but how I get to it is through the footprints in this drop down menu here. I go to volume footprint. I go to volume footprint. Um, Only thing I'm interested in is the delta, which is this line down here, the top line, and the cumulative delta is here. So let me explain it to you just a little bit. So what is a delta? Delta means aggression. Delta, it actually measures the difference between buyers hitting the market and sellers hitting the market. Delta equals market buys minus market sales. If delta is positive, buyers were more aggressive. If delta is negative, sellers were more aggressive. The delta shows who's more aggressive at that moment. The green candle with negative delta, a red candle with positive delta. Now, what is cumulative delta? The CVD. Cumulative delta, it equals the running total of the aggression over time. Delta tells you who wins the fight on this candle. Cumulative delta tells you who has been winning the war over time. Over time. Okay? If the CVD is rising, buyers are consistently more aggressive. If CVD is falling, sellers are consistently more aggressive. Why does this matter? I'm going to tell you why this matter. The delta shows the effort. Price shows the result. When effort and result disagree, that's information. Negative delta, but price won't drop, sellers are getting absorbed. Positive delta, but price won't rise, buyers are getting absorbed. I want you to commit that to memory. If you need to take a screenshot of this right here, take a screenshot so that you can understand it, so you can read it, so you can study it. And so let's get on with it. So I'm going to start with a blank canvas, and I'm going to tell you how I start off every single day. This line right here is called a VWAP. So I always keep this on there. I usually have the bands on it, but I don't have the bands on it. So I always want to um, get my sessions out. But before I go even further, yeah. So to put this in layman terms, before I go any further, because this just came to my mind. This top row right here, that is the delta number. The bottom row here, that is a cumulative delta. I can't say that word right. Don't judge me. And so, in essence, I don't know if you guys know about boxing, but in boxing, they have a scorecard, and on a scorecard, they count how many punches was landed and how many punches was thrown. And so I had to put this in terms where I understood it. So you see this negative 6.88, that lets me know that's how many punches the seller strong had through. Even though this is a positive delta right here, this is letting me know, hey, there's still, you know, sellers are still punching. They're punching their way through the battle. And you remember, this is how long sellers over time. Okay, so now let's go on and move. So as you guys already know, I trade auction market theory. That is what I trade. That is what I've been trading with volume profile. Now I've added footprints to it. So the reason why I added footprints to my trading is because I simply was getting in trades way too early and getting stopped out. I would get in, I would have the direction correct, I would have everything correct, but I wound up getting stopped out. And because I try and follow my own rules, I only take two trade, maybe one or two trades a day. So, so adding footprints and studying footprints to understand footprints has really made my entries that more precise. So yesterday was February the 11th of 2026. And so I always start off on the 4 hour time frame. Okay. This is my 4 hour time frame here. All right. And so um, I always use a reference box of 20 points. And I do 20 points just to give myself a little cushion room to enter into a trade because a lot of times price will not come directly to your zone and let you right in. It will not do that at times. So I want to go ahead on and get this going. So this will I'm going to mark this, go to my templates, and this is going to be my previous day value area high here. Okay. And let me get rid of this. Oh man. There we go. And I'm going to take my time going through this video step by step. And this is what I do every day. Every day when the market closes, I always adjust my previous day's levels. So this is the previous day POC here. So I'm going to mark this here. And so I'm going to mark my previous day value area low here. Go to my templates. Previous day value area low. So now these are my levels. I have my levels drawn out on a 4 hour time frame. Why I draw them out on a 4 hour time frame? Because the higher time frame is always going to be king, no matter what. It's always going to be king, no matter what. So, and once I do that, I'll go ahead and I will lock them in place. So when I'm moving around, I don't make a mistake and delete them. Okay. Now, also what I like to find out when I am drawing my levels, you remember the higher time frame is the one that'll always win. So now I want to go to the monthly. Okay. All right, maybe I need to take this off. Let's take that off. We'll take that off. Okay. All right. So we'll take that off there. And so if you see here, you see we have a swing low here and a swing high there. And so this is on my monthly time frame. So I will do that. I'm gonna make it here. So that way I have my look and see my monthly levels. I can use it here as an option. I also, but that's can use it here, starting here at this candle here and stopping it right there. Okay. So let me help you understand this real quick. The reason why I took it from this candle here to this candle here on my monthly because we are in a balanced market. As you guys know, price we will always, this is the high time frame. Um, we will balance here. This is a balanced market here. So price left this balanced market, went imbalance to this here. From all up here, this is all-time highs, okay, on the monthly scale. But I'm gonna drop down to the 30 minute just to show you. And if you've been following the videos, you will see what I mean. Okay. So we go from a balanced market, imbalance, to a balanced market. Balanced market here, imbalance, created a balanced market. And it left the balanced market went imbalance. Now, if we go straight to the left over here, we will find a balanced market. That's what it found another balanced market. Okay, so auction market theory is a system of balances and imbalances. So let's go back to the monthly time frame. So I want to draw my monthly levels out now because the monthly levels are stronger. Okay, so as you see here in that small balance area that I have, and so this monthly profile is from October all the way to January because we are in February now. So I don't want to grab February because we're not done with February. We're done with January. And so from here, again, I will copy this. Come on, why I don't want to copy? Because I locked it. It's locked. That's why. Let me unlock this. I'll do this one. So from here, and I really like when levels are really close. It just makes them so that much stronger. So I want to mark this as the monthly value area high. Okay. And if you guys been watching and paying attention, anytime price get to your value area high, you always look for potential sales. All right. So this is the monthly POC here. And this right here would be my monthly value area low. And when price come to your um, a value area low, you always look for potential buys. This is supposed to be green. Why is, let's change this color to green. Uh, let's change this color to green because this lets me know if this is because it's green. It lets me know look for potential buys. It's just a reminder. I have red. You want to sell high and you want to buy low. The POC, the yellow color, hold your horses. Wait until probably show you what direction it wants to go. So once I have my monthly level, and then I would drop to the weekly, okay? And how I would draw my weekly level. So now we have that. I can get rid of this so I can see. And now you see how we're like in a balanced market here. So what I like to do, just I like to try a swing high and a swing low first. Just see where it's lining up with price. If it's not lining up with price, I would look for a different range to draw. So I'm gonna take the swing high to swing low, see where it is relative to price. Let's see, it's pretty good, decent. So I'm gonna just drag this to here. I like this right here because it's in between where prices is. It's in between where my monthly levels are, my previous day levels are. So I would like this right here. Okay. And I notice will look like you have a full drawing. Everything is full, but that's okay. But you do the same thing. You mark your high. You can leave this POC here, and you can mark this right here as your weekly value area low. But I'm going to go ahead on and again, so you just copy it. You copy that right there. And now this is my weekly um, value area low. I'll leave the POC there. And you see how close this value area high is. I still like to use those um, as levels, my key levels. Weekly value area high. So now that I have all of my key levels drawn out, I now will go to the 1 minute time frame. I would split it. I would do a split screen. I will have my 5 minute on this side and my 1 minute over here. And on my 5 minute side, I will have my footprints so that I can see what's going on. And as you see here, if you look over here on this side, what is this white line? I don't know what that white line is. I'm going to delete it. Delete this one too. So I'm going to pull this profile back up. Oh, wait a minute. This is, I need to change this. That was for something else. I need to change this to NQ. There we go. There we go. Change this to NQ. Make sure that is right. So let's look at here. So yesterday was 11. Today is the 12th. So starting at 6 o'clock here. At 6 o'clock. Wednesday going into Thursday. Right here. Okay. So if you look at price, what happened overnight, we did a very small value migration. Price was not really ripping off anywhere. So this right here, it kind of still is a balanced market here. So when I got up this morning, I seen at 8, about 8:30, I seen that we were above the previous day value area high. So instead of, because we were above the previous day value area high, I'm going into the market at 9:30 to see if this is going to serve as a support instead of a resistance, because like I shared before, if price is down here, if price was down here making its run, making its moves up, you will look for price to come off of here and come and start making its way down. Okay, that's what you would look for. All right, and it'll be vice versa for the previous day value area low. So as I zoomed in closer, as time it was getting close to market open for 9:30, right here is when I use the delta. Let me turn this off. Turn this off. So I'm zooming this in so you can see my numbers down at the bottom here. And if you look right here, each candle right here is making its own volume profile for the candle. All right. It's making its own volume profile. Do you see this white line here? This is the value area high of the candle. This yellow line here, that's the point of control of the candle. This is the value area low of the candle. So let's start here. As market began to open up, I looked here and I said, okay, we did not go we did not go higher. And if you look on this candle here, so if you look straight down here, I'm lined up with the candle. Right here to the right of it is the delta for it. And right beneath it here is the cumulative delta for this candle here. So I'm looking at the delta, okay, it's a positive 77.86, but price did not expand. Let me make this a little, I think I could do this right here. All right, so you see how price came here. We're gonna go through it like this. I'm not gonna pull up the other chart. So we're looking right here, 845. I see a negative delta here, but 575 CVD. We're just going to call it that. We're just going to call it the CVD. All right. And so right here, this is a positive number, letting us know that the Bulls threw more punches. All right. So the Bulls won, excuse me. So the Bulls here had some pressure here. Even though this is a red candle, but we don't look at the candles. We don't look at that. You do, but you don't. You look at the data. This was absorption. So the sellers absorbed a lot of the bullish pressure. So I looked at this candle, I read the data, and I'm looking. If price, so I said, okay, well, since we are above the previous day value area high, the rule is you want to retest and see what happened on the retest. So this is where it gets very, very important. And this is why you do not buy high. Okay? You buy low. So in this example here, the rule is if you break above your key level, okay, wait for a retest to see if your key level is going to be a support or if your key level is going to go back to being a resistance. So if you see where I have everything lined up right here, this is that 9:30 opening candle on the 5-minute time chart. So on a 5-minute time chart, okay, the 5-minute time chart, we have a negative 635 delta, and they threw the sellers threw a lot of punches, 1.520. All right. So I'm looking at it, I said, okay, I'm looking at this, and those of you who have been following me, one thing that I use for confluence on a 5-minute time chart, what do I use sometimes? If my 9:30 candle give me this here, if it gives me what? A doji, one thing that I look use for confluence sometimes, um, the doji strategy, but it have to be at a Q level. If price close beneath a doji, it's going to come back and retest three spots. Retest here, here, or here. But what I like to do at times, I like to draw. I use the Fibonacci retracement, and I would start here, and I will end where the doji is. Now this is just my 50% mark. Now I do have a template for that as well. and I call this, I think, the fair value gap one. I need to change that. So this is 25, this is zero. This is 25% of the doji. This is half of the doji. This is 75% of the doji. And this is the full percentage of the doji. And sometimes if I have time, if price is not moving too fast, I will go ahead and put this out so I can know. Overall, this is a 60, about a 60 point doji. So I probably would have waited until if if I was to get into wanted to, I'm getting off topic, but how I take them, let's say if I wanted to do a short here, you guys already know I always have what? A 30-point stop loss. I put my 30, about my 30 point here. And so this lets me know, let's say if I get in this trade and it keep on going, um, that means it wants to take more liquidity above, but I have figured out a way to take all the guesswork out of it because when I was trading it like this, I'm guessing. And so what has helped me out is using the delta and the CVD. This stuff right here, the delta and the CVD. So for me, as I'm looking at this here, this 930 candle, I'm looking at the delta and the CVD. Now, anytime you have a negative delta or positive delta that's in your direction, or if you're looking for something in your direction, you always want to wait till the next candle print. So the rule is you broke above your key level, you want it to come back down for a retest. Come down for a retest. It's not showing, these delta numbers are not showing me anything bullish at all. So this right here lets me know the sellers, there is a big player adding size as price is going down. And so this candle right here really was a telltale sign right here for me. Even though the 930 candle was an indecision candle, this was an indecision candle as well. A very, very, this is a doji. Okay. So what happens here is I'm looking at this candle and I see it's just a positive 25 doji, but look at the selling pressure with the CVD here over time. I said, okay, sellers really showing their hand. And so once this candle start forming here, again, there's nothing bullish about the numbers that I was seeing at the time all this was going. And so if you look at this candle here and right here to the right, right here, you have a negative 1200, a negative 1200 doji, and then you have a negative um, 2.7 CVD. So that's showing me again a positive sign. So how I now look, I look at this close here now. It closed outside of my doji. And so I'm so okay. Now what about the retest if I wanted to use the retest of the doji? But like I said, that's just something that I use for a confluence. So anytime price close, if you have a doji and it's a relatively large doji, a nice size doji, if price close outside of it, that's letting me know that price want to head in this direction. Or even if the doji close above here, it's let me know, okay, keep your eye out. Price may want to go bullish. But I only use this at key levels only. You only use this at your key level as a confluence. And so this right here lets me, once I seen this here and I seen how the sellers were really pushing, I said absolutely. I'm getting ready to get ready to find my short to get in. So then that's when I drop down. I'm gonna split this real quick so I can find my sniper entry. Okay. So I can find my sniper entry. I'm on a 1 minute time frame now. And I said to myself, now this candle right here, it's this here. this candle right here on the 1 minute. And I already had a closure beneath this doji on the 5 minute time frame. Okay. But again, I said I use that for a confluence, but I always look for a retest of the master key level, which is my previous day value area high. And so therefore I will wait because I have this closure here and I seen on the 5 minute time scale the pressure that we had from here. So now here's where it gets very interesting, guys. Very interesting. Now, if you look right here at this candle, we have a value area high and we have the point of control right there on this candle. And we have the value area low. And when I got in this trade, I got in this trade at the value area low today of this trade that I took. So I got in at the value area low here because I seen the pressure. I'm looking at the data. I'm looking at the CVD. The seller's throwing a lot of punches. I'm looking at the delta. And I said, well, if price come in and retest my previous day value area low and plus is lining up with my doji that I use with the confluence, I'm going to get in the trade. And so price, it came down. So it opened here and price started moving down. Then price came back up. It wicked me in. And once it wicked me in, I said, well, it looked like we're going to do a full rotation. And so my TP was here at the previous day value area low because that's a full rotation. So I was in, I took half my contracts out at TP1. And as you guys already know, anytime I get in the trade, I'm going to go to TP1 here. This is TP1. And this right here. Anytime price get to my TP1, what do? I take off half positions. If I was in 20 contracts, I'm taking 10 right here. So therefore, I'm in a risk-free trade, and I get to leave my stop loss right here, and I get to give my trade room. Okay, and so this was my stop loss here. I'm sorry, my TP1 here. I didn't because this is a tight range. This was 119 points. I did not have a TP2 in the middle of here. I could have taken it, put a TP2 right here, my weekly value area low. But however, if you see when we got here, price, when I got in the trade, price came straight down. It came down and hit this, went here. I said, I'm just going to remove 5 points from right here. I'm going to do 5. I'm going to take 5 off so that'll leave me up with a 5 runner. And I said, I know we're going to go lower. And so on here, let me just change this and you'll see it because I got it drawn out. Because I did all this on the micros. M and Q. So as you see, this is where I got in the trade at. I left it here. And I don't know what my monthly is different from NQ and MNQ. I learned a lot of people think they're the same, but they're really not the same. Sometimes if you really look at it, the numbers will be different. So how I drew it up on NQ is the same way how I drew it up on MNQ. I wanted to start off with a blank canvas on NQ, but as you see here, I got into the trade right here, and my TP was here, the the full TP right here. This was the 119 points or whatever right here, and so Um, the and that's what I said to myself. I'm going to continue to look at this delta. I'm going to continue to look and see how this delta is acting. Let me just change this over. Let me change this to that there. So now they're both matching. So both sides are M and Q now. And so as I was seeing the pressure, the amount of pressure that the sellers, let me lock this, the sellers was putting. So after it hit here, I seen all this pressure right here on the 5 minute time chart. I seen this pressure here as it was coming down. It was just growing. It's this right here. And I said, oh man, let me split this. I'm gonna just take five here and I'm gonna continue to let my delta run. We're gonna see if it, let my trade run. I'm gonna see if it hit here. We're gonna see if the delta will continue to drop. And so I was able to quickly take just five off here and I moved my full TP to here. And so I'm looking at the delta. I'm like, oh man, I'm study looking at the delta. Now I was very tempted to do something that I never ever done before. I'm gonna have to forward test this or maybe back test this on the paper trade. Once I seen this right here, I said, oh man, I want to add 10 contracts right here. There are people that do that. It's just I never done it before, and so I didn't want to lose all of what I just got. So I'm pretty sure um, it can be done because that's what the bigger guys do, but I'm not there. So I really, once I seen this candle close right here, this is when I wanted to add in another 10 contracts. I go full port and go YOLO, but I didn't. I stayed disciplined. And so as I seen this here, even though this is a positive delta, very small candle, but look at the punches that the sellers are throwing here. So I kept feeling really good. Looking here, look at the punches, look at the delta. I said, okay, cool. I'm gonna just go ahead on. I'm gonna let it just take my runner out. And so that was the trade for today. Um, and as you see, we came all the way down, and now we are rebalancing out the market. Now, let's go over some things real quick. If you see right here, this is called a balance. Let me do this right here. Let me close that up. Let me do this. Let me just show you guys. This is auction market theory. This is how I trade. This is what you would call a value migration right here. Hold on. This is value migration. Okay. This is balance. This move is imbalance to find a balanced market. This is imbalance, went to balance. This is all balance. This is imbalance, the balance, value migration. Anytime price go from balance to imbalance is value migration. Now I'm getting ready to show you something. I'm going to draw this right here. What is this? This is balance. Now I'm going to show you something. Um, this is what I call fair value, balance market. Now we have to do something right here. Let me show you something. Now I'm going to go to the left over here, and you're going to see how why this price moved from this balanced market to here, to here, to here, and balanced out. Okay? Because it always go from balance to imbalance. Let's go to the 5 minute. Let me go to 15. What do you see right here? right there. What is this right here? Just in this section, a balanced market. Let me drop down to a lower time frame. What do you see? This is the same one over in here, where price here. Now, the point of control is always going to be the area where the most business was done. This is the point of control right here. And now let's see where price is at over here. The point of control is always going to be a magnet, fair value, because that's where the most business is done. And look at this here. See that? Interesting. So, on a larger scale, just zoom out. On a larger scale of things, if you look, let me do this real quick. In all actuality, hold on, let me see. Let me change something here. I could just remove those. Well, you can see a little bit more better here. So in the grand scheme of things, you have price here, imbalance to balance, imbalance, to balancing out just in this little section right here. Trap some people, and then where did it go? Okay, it made a balance here, imbalance, balance, imbalance. Okay, balance market. Do you see? Again, this is called value migration. All right, and you see how price, if you take this here, you can take just this section right here, right there, if you wanted to. And look, it came down to a balanced market. If you don't like that one, you could have just took this one here. You could take this whole move. And where are you at? Price came to the middle, which is was the point of control when I drew a fixed range out. Okay? So, balanced market is balance, balance to imbalance. And look at all this right here. This is all balance with all this. It did a very small imbalance, but what did it do? Come back into balance. So you can call all this right here. So balance market, it went imbalance, came back up to balance. There you go. I hope I said something to kind of help you understand auction market theory a little bit better and how I trade auction market theory, adding volume profile and adding footprints. Um, I know someone probably will want to know what are my settings, what are footprints. So these are my settings for the footprints. The row size here, ATR, display, cluster, The type, I just want the delta. I don't need none of that stuff. I don't need that right there. Put that at delta. That's what brings it on at the bottom like that. My POC are yellow. Info box, I'll leave that the same. Leave this the same. Leave all this. And that's pretty much all for my settings for it. All right. Until next time. Peace out.